In this module and for the rest of the modules in this unit, you will learn different types of fund financial statements. In your first class, you learned that every governmental entity prepares two distinct sets of financial statements. One is the fund financial statements, another is the government-wide financial statements. Fund financial statements are fund specific. You also know that there are three major categories of the funds: governmental funds, proprietary funds, and fiduciary funds. So we mostly will focus on governmental funds and proprietary funds. So governmental funds is the most important fund for any government, and that covers almost 90% of all fund activities. And for governmental funds, there are 5 types of funds. You already know through that acronyms, if you remember from your book, GSCDP, or in the Baker book, they use the term GRASPP. That means under the governmental funds, we will focus on 5 major types of funds: general funds, special revenue funds, capital project funds, debt service funds, and permanent funds. Let's start with the general fund. General fund is the most important fund of any governmental entity, and every governmental entity will have a general fund, and it starts when the governmental entity establishes its entity, and then it exists throughout the life of that unit, and it covers all regular day-to-day activities of that unit. Now, this general fund collects a lot of revenues, and their huge source of revenue is coming from different type of taxes, mostly the derived tax revenue, or it could be the impost tax revenue, which is property tax, and they also earn revenues from different public safety and regulations such as fine and fees, or they could get some intergovernmental shared or grant revenues. They could charge for some services, or they might have some other type of revenue such as earnings from investment or any type of miscellaneous revenues. On the other hand, for the expenditure side, you will see that they spend for regular governmental administrative type of tasks, and maybe for public safety, police department, fire department, or some regular cultural recreational activities such as beaches, parks, libraries, etc. And the major criteria for governmental funds and of course for general fund is that they use the modified accrual method, and you are familiar with that. Modified accrual methods focus on current resources on their balance sheet. It will be only current assets and liabilities, and they also record budgetary entries and encumbrances, and at the end of the year those entries must be closed too. So here you will see general fund was kind of the major fund for any entity, and that provides supports to other funds, and that's why most of the cases you will see on their balance sheet they have different type of fund balances which can be categorized. You already know assigned, committed, restricted, unassigned fund balances, and they always will have positive unassigned fund balances, and they can provide support to other funds from that. And there might be some miscellaneous items, revenues or expenditure items that may not fall in any other categories that we always put under the general fund. And if you look at their balance sheet, they will show all assets, of course liabilities too, and all are current resource focused. That means current liabilities and current assets, and the difference we call it fund balance. If you look at the example here in the CPA book and the Progressive Township balance sheet for the general fund, you will see they have non-spendable fund balance, they have committed fund balance, and unassigned fund balance. Although there could be 5 categories, they have 3 categories, and the most of the fund balances are positive, and unassigned fund balance is a huge source. You see $1.527 million. Now if you look at their statement of revenues and expenditures, And of course, after subtracting all expenditures and other financing sources or uses, you will find out their changes in fund balances. And for the general fund, you will see majority of their revenue is coming from property tax, fees, and fines. The total amount of revenues you see here, 1.795 million, and they have different expenditures, all relates to regular activities such as general governmental, public safety, and some other culture and recreations, and they have some other capital outlay type of expenditures. Remember, they might purchase some long-term items, assets, but they always also record those as expenditures. They also have other financing sources and uses. That means money is coming from other funds and they are also giving money to other funds. After all those items, you will see the net changes in their fund balance is positive. So this is about the general fund. Next, we will learn about the special revenue funds. So special revenue funds account for revenues and expenditures that are specifically restricted and committed for some specific purpose other than debt service or capital project. For example, you could keep aside some sales tax for some spending on some tourist facilities, or maybe gasoline tax for maintaining street lamps. So here you will see when we keep aside some money or restrict or commit some specific amount for a specific purpose other than debt or capital projects, we put it under the special revenue funds. And there might be some grants that could also be fall on special revenue funds. So when you look at major revenue sources, so it mostly coming from some specific taxes, share tax, or some specific grants, or some intergovernmental revenue sources. Now, if you look at the expenditure, those expenditures are current operating expenditure for that specific purposes. Those revenues are reserved for. And there are some specific and special accounting issues there. One is expendable trust activities. So expendable trust activities means the fund that you can use the principal and income from that fund. And you will also see there might be some specific grants that are for that some specific purpose that goes to a special revenue funds. And depending on the eligibility or timing criteria, special revenue fund will record or recognize those items. And then if you look at the financial statement for the special revenue funds, you will see the statement of revenues, expenditures, and changes in the fund balance. The example shows the revenues are mostly coming from intergovernmental transfer and interest earnings, and they have different expenditures for those special purposes, and they have also transfer out, and you will also see the changes in their fund balances. Third category of the governmental funds, which is also important, it's called the debt service fund. From this name, you already know that the purpose of this fund is to accumulate some resources, some money, and to keep those for the payment of principal portion of the loan that is current due, and of course interest that is currently due. So here you will see the revenues mostly may come from some property tax or some other general fund, other resources. And then if you look at the expenditures are mostly spent on paying the interest expenditures, which is current due, and the principal, which is immediately due. It does not cover or show long-term notes payable or covering the interest expense that is due in future, not immediately due. So if you see the journal entries there, you will see one journal entry. It shows they received some money from the general fund, so cash was debited and inter-fund transfer is credited, and then they received some other money from different other funds. For example, second entry, they are receiving money from the capital project fund, and then they are also recording those as their sources of revenues. And the last entry, you will see that they recorded revenues, which is interest income. So this is how they will record their revenues, and mostly they are getting revenues from different other funds, general fund or capital project fund, or that could be their investment income. On the other hand, if you look at the expenditure, as we discussed, they pay interest expense and of course the principal, but that could be current due. And both cases, no matter they are paying the interest or they are paying the portion of their bonds or loan payables which is current, they call it expenditures. Now we will see here their balance sheet item. So they have some assets and they have liabilities, and they also have fund balance. The differences between the assets and liabilities, remember, they always will have the fund balance categorized under the restricted category, because those are restricted only for paying interest and principal. Now here you will see some closing journal entry example. If you read the CPA notes, that means they received some budgetary amount, estimated budgetary tax, and they decided some appropriations. So at the end of the year, they will close that budgetary journal entries. They will close all other revenues entries. Their revenue sources were all mostly coming from the other funds, and of course they also have one amount as the investment income. So they will close all the revenues, they will close all the expenditures, and they will show what is their fund balance. Now what we will do, we will go over some quick problems related to these three funds that you just learned. So first question, Brandon County's general fund had these following transactions: transfer to a debt service fund, this is debt service under the governmental funds; payment to a pension trust fund, remember trust means always fiduciary categories; purchase of equipment. So these are the transactions. The question is, what amount should Brandon County reports for the general fund as other financing uses in its governmental fund statements of revenues, expenditures, and changes in funds? Remember, these 500,000 they are paying to a pension fund. This one they are purchasing an equipment. So the answer will be 100,000. Question 2. Central County received proceeds from various towns and cities for capital projects financed by the county's long-term debt. A special tax was assessed by each local government, and the portion of the tax was properly restricted to repay the long-term debt. So they have some tax income and they restrict a portion to pay long-term debt. And now the question is, Central County should account for the restricted portion of this tax, special tax, for which of the funds? So since it's related to the payment of long-term debt, it is should be under the debt service fund. Number 3, debt service fund of a governmental unit is used to account for the accumulation of resources and the payments of principal and interest, of course, in connection with what? In connection with, remember, it's under the governmental funds. So debt service fund pay the loan principal amount and interest on that, but those loans, those are related to other governmental funds, not related to fiduciary or proprietary fund. If a loan is taken by the enterprise fund, that is not under the debt service fund. So debt service will deal with other governmental funds, loan payment and interest payment. So it's not fiduciary, it's not proprietary, it's only other governmental funds. So the answer is A. Number 4, on January 2, the city of Walton issued 500,000 10-year 7% rate bonds, interest is payable annually. So the next interest payment will be on January 2 of the following year. Now, what they need to report at the end of the year, and their fiscal year ends on September 30th. So they took the loan, fiscal year ends on September 30th, but the loan is payable in 10 years and interest is at the end of the year. So when you consider the fiscal year, it ends on September 30th, but they are not paying it before or on September 30th or immediately after September 30th. So that's why it is not a current due. But you know that for debt service, no matter it's the loan payment or the principal payment, they only show the current due portion. So we don't show any accrued interest that is payable in future or any long-term principal payment or payable. So basically for the year that ends on September 30th, that fiscal year, they will show nothing under their fund balance.